We've been so distracted by these global events and the tariffs and NATO now. But when you look at the fundamentals of the U.S. economy, the positives really do outweigh the negatives. I mean, you have tax reform, right? And regulatory reform, and you've got the best employment picture that we've seen in a long time. So when you're weighing that against the negatives, I think analysts are correctly extrapolating that earnings season will be very, very strong. And one last thing about earnings, you know, when you break down earnings, earnings growth is the simple sum of the revenue increasement, margin improvement, and share buybacks. So you've got three ways to grow on that earnings growth. And so far what we've seen is the margin improvement. A lot of people think it was the share buybacks, but when you break that down, the 27% in earnings growth, really half of it comes from margin expansion.
Eric, why are financials failing us at this point? I mean, when we take a look at the market and what has led us so far, of course, it's technology. We showed all-time highs today being made by Amazon, Microsoft, Facebook, et cetera. Do we need the baton, so to speak, to be passed to a group like the financials to carry us through, or can we keep going without the financials? Because the earnings, JP Morgan the earnings were fine, and the stock is flat.
Well, you know, generally speaking, financials and transports, you'd like to see those areas really lead a healthy bull market. So I don't think you can really extrapolate any one trading day as far as what's going to happen. But what we've really seen in recent weeks is all the anxiety over trade tariffs have really caused investor sentiment to turn overly too negative. And we think some of the hardest hit areas like semiconductors, materials, and industrials really have become oversold. And at the Hodges funds, we're looking for those areas to find some oversold individual stocks. And once we hit earnings season, we think the focus back onto fundamentals of companies will help reverse a lot of that negativity out there.
But the underlying question, Eric, that I was trying to get at is, do you question the health of this market because of the narrow leadership? Maybe Peter has an answer for me in terms of, you know, we don't want to extrapolate one trading session, but this has been underperformance for the past at least 3 months, for the past year to date in terms of the financials. And if we're looking for the leadership to change to another group like financials, it's not happening right now, and it doesn't seem the earnings at least are a catalyst so far.
Yeah, that's right, and I think that you will see that in the financials. I mean, the inverted yield curve that we're all anticipating, that will hit net interest margin, so I think people are factoring that in. However, one good thing about all this is that the PE of the S&P 500, if you've looked for the forward PE, it's finally down to the 25-year average. It's gone from 19 to 16 times. So in terms of thinking this market might be overvalued, you just have to look at that forward PE, and I think that dismisses that argument.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.